What's up you guys, Sasha here. Now exactly 3 months ago to the date when I'm recording this, I went and published a video about opening a new Trading 212 account. What I did in that video is I showed exactly what it takes to go and start from absolutely zero, go through the entire application process, the kind of questions they ask, how you go and load money into the account, how you buy your first shares, the way the platform works and the way it looks, just to help some people who are starting out for the very first time try to understand exactly how investing works when you're a beginner, all of those kind of things. Now in that time a few things happened, and I promised in that video that what I'll do is I'll come back and I'll do updates and I'll show you exactly what I'm doing with my investments. I'll show you exactly what is happening with the performance on those investments. I only released one video since then really about this, and I didn't do any updating on these investments at all. I talked about two other stocks that I was buying at the time, and they were Tesla and Sony, and I explained exactly why I was investing in those two stocks at that time. But I thought it was time, now that we've had a 3-month period pass since I went and did that very first video, to go and tell you a little bbit about those investments. Now, in total, across the first and the second time when I posted those videos, I went and invested £3,000 into Trading 212. Those are the only two times when I invested money. Literally, I invested when I made the first video. I put £1,000 in exactly 3 months ago, and then about a month and a half or thereabouts later, I went and did a second video. And in that second video, I went and invested another £2,000, and I spread that across buying Tesla and Sony stock, where I put the majority of that. But then I also bought a bunch of other things in the process to kind of distribute my portfolio a little bit, add some other shares that I didn't buy the very first time round. So I'm going to go and show you exactly what I have, exactly how it's doing, but just for the spirit of a complete transparency before we get started. So since I went and released that very first video, I had a few free stocks given to me by Trading 212, because every single time somebody uses one of my referral links to sign up, go and check the description below if you're interested in it. What happens is the person who uses the link gets a free share, which they otherwise wouldn't get, but I also get a free share. And so it's a win-win kind of situation where I get a free share for recommending this product, or at least talking about this product. I am not a financial advisor. I can't provide financial advice. I don't know your situation. If you do need financial advice, please go and consult a qualified financial advisor in your jurisdiction. But in any case, if you're interested in opening a Trading 212 account and you go and use that referral link, you'll get a free share and I will also get a free share. And to date, I've got about £246 worth of free shares in this account. I haven't had that many people go and use the link because I haven't actually made very many videos about Trading 212. But what I did have is the money that I invested. So the 1,000 the first time round, the 2,000 the second time round, and these £246 that were sort of coming over the several months that the first video has been out, together have actually yielded a return of just over £400 so far, which is phenomenal. It is insane. The market hasn't been doing particularly well during this period. There hasn't been much growth on average, but the stocks that I picked have been doing pretty well. So that's according to the data right now that you can see over here. And here you can see what I'm seeing on my phone right now. It's about 12.4%. That's pretty amazing for just the first 3 months. We'll call it beginner's luck. We'll call it beginner's luck for the very first set of investments that I'm talking about on this channel. Let's see how we get along. Let's dive right into the numbers and show you exactly what I have in terms of my investments. Now, the two biggest investments, unsurprisingly, because of the videos that I've made, and I'm going to just go through them right here, are Tesla and Sony. And they're right next to each other over here. So with Tesla, I have a cumulative value of £688 worth of shares in Tesla. I've got two. I hold exactly 2 Tesla shares after they've done that stock split. And I actually invested over £500 into Tesla in terms of the total amount of money in order to have these 2 shares, but they've grown over a third on average since I put that money in. And the majority of that money, the vast majority of that money, actually only went in less than 2 months ago. That's pretty crazy. That's incredible. Probably like a month and a half, a month and 20 days ago, something like that. So that's been pretty insane. Sony so far haven't done what I thought they would do. So while Tesla's been kind of all over the news, building a new factory in Berlin, all the positives with their new cars that they're announcing, the changes to existing cars, everything else that is coming out. I'm not going to go into the details, there's separate videos that are required for that, but with Sony, I haven't had the same situation happen just yet. I still am a huge believer in the stuff that the company is doing today. I still believe that there are massive downsides to the business that are happening with everything that's happening in the 2020, especially their film division and other products that they are not selling perhaps as well as they could have in a different time. But I am holding to this investment because I think there is still a huge upside that we are yet to see from Sony. And I have a £462 worth of investment in Sony. So that's down almost 5%. That's quite considerable. So together these two are more than 1,100 out of my 3,600 investment portfolio. That is actually a really bad thing. This is something that I would not recommend other people do. I would not recommend that people who, especially people who are first getting into stocks and shares, people who don't necessarily know the market, who haven't done it before, for whom this is their entire savings amount of money that they hold, and if they were to lose it, that would be a really big deal. I would recommend that you don't do what I'm doing here and have a large chunk of that money sitting with one or two companies. I'd recommend that most people would probably benefit considerably in just investing in the S&P 500. The issue is, if I invested in the S&P 500 over the same time period, I would have had pretty much zero growth. And a lot of other people who've been investing in this time period, if I invested just slightly earlier, I probably would have been down by some percentage at this point in time. That isn't to say that I am able to beat the S&P 500. The likelihood is that I will not. The absolute overwhelming majority of people who do what I do and just buy shares and keep those shares lose against the S&P 500 over a prolonged period of time. 3 months is absolutely no measure of whether you're any good at investing whatsoever. Things can go down much faster than they even can go up. It is incredible how quickly you can lose value in shares. Something will happen whether these companies now lose a ton of money. So I will say most people probably shouldn't be doing what I'm doing. Again, not financial advice. I can't offer financial advice because I don't know anything about you. If you need financial advice, go and find it somewhere else. Anyway, let's go through some of the other shares. Let's start from the top. There's a bit of a distribution there. Unfortunately, on desktop, you can actually sort them by amount very easily. Here, they're just alphabetical and there's nothing I can do. Maybe on a different app, maybe on the Android app you can do it, or maybe there's something that I just don't know about how you can play around and view this stuff. But anyway, let's just go through them as they come. So first I have a bunch of tech companies on this, and the reason is I believe that the tech industry at the moment is going through some phenomenal change, and not just as a bubble, not just this year, but over the coming years. The world is changing rapidly. The way we work is changing, the way we interact with other people is changing, the way companies function, the way that big companies function as entities, or whether they break down and begin working with smaller companies, is changing. So that's why I have most of my investments in tech. So you can see at the top, the first three are tech companies. I have Adobe, I have AMD, and I have Alphabet. They're very, very different. I increased my holdings in Alphabet since the first video, and the other two as well. Adobe is a provider of services, so they provide lots and lots of tech that companies use to go and either produce various types of content or get analytics, or lots and lots and lots of other similar kind of software. I believe that the stuff they're doing is excellent across the board. I've used their tools and services from large enterprise solutions through to consumer Photoshop and various other types of photo and video editing like Premiere Pro software. AMD are a very, very strong manufacturer of computer hardware. They are currently the lead manufacturer of processors. They have completely destroyed Intel in the process of manufacturing the latest chips. They've literally just a day or two ago, I can't remember exactly when it was, went and announced their very latest processors, which are much better than the last ones, which are already better than the best thing that Intel do. So they are doing incredibly well. There's a really good reason why they are up almost 50%, and I am holding on to that because I think a lot more is yet to come from them. Alphabet, parent company of Google, I'm not going to go into the details. I love what Google is building and how they're building it, and I'm holding on to this for the long term. I don't care that it's 1% down. Anyway, next I have Amazon, Apple, the big ones that I think most people will hold in their portfolio. Maybe I hold more of this than some other people would. Amazon, a lot of people say maybe they've been overblown. I kind of think that both of these are going to be held for the long term. Now, by the time this video actually comes out, Apple will have their annual announcement of the new iPhone, which is happening in about 45 minutes time. So it may well be that by the time you're seeing this video, you will notice that the Apple shares have either skyrocketed because everyone absolutely loves the new 5G phones, or is collapsed because the expectations for this new phone were far greater than what they have actually come out with. We shall find out, but this number may not move, but probably will move one way or another. We'll see. Next, I have an interesting one. I have Asana. I actually have further down another one that I'm going to cover right now. That is Palantir. So these two companies entered the stock market over the last couple of weeks, and I invested a small amount of money in both just because I'm interested to progress, and I actually like both of these companies. So Asana is the provider of sort of online organizational software which you can use to go and manage your tasks, manage your processes, have a team of people managing several queues of different things happening, and it's pretty decent. A lot of people really love it. I think it has a really bright future. There's only a really small number of these tools out there, and people are saying, well, you know, maybe some people prefer ClickUp, maybe other people prefer Trello or whatever. I believe that with the small number as it is, each one can have insane value if they continue doing what they're doing. So I've got my money in that. Palantir is a sort of technology and technological solutions company that hires some unbelievably smart people. Some of the smartest people that I know from studying at university have gone to work over there. I've spoken to people who work there. I have an unbelievable amount of respect for that company. The level of science and the level of knowledge that they bring to the technology world is insane. They are hired by governments, they're hired by large companies to go and improve their data warehousing, improve their analysis of data, improve what they do with their system. So although that both are down, Palantir is down 7% since they launched. I bought pretty much the minute that the stock launched. I had a pre-order on that. I am holding on to that. I think there's still a really bright future for them. I'm not interested in getting rid of that at all. Now, next I have Boeing. A lot of people will probably say, why have I got an airline stock in 2020? The reason I have it is I bought it once it was already considerably down versus its previous levels. I'm kind of a big believer that things will normalize, things will go back to normal at some point. Maybe it'll be summer next year, maybe it'll be end of next year, maybe it'll be I don't care. My belief is that there are two companies out there that are streets ahead of anybody else in producing airplanes, and they have been doing very different things. Boeing has been all about efficiency, all about building smaller, more nimble planes that are better at moving you to smaller destinations. Airbus has been focusing on their A380 line and sort of big super jumbo jets and 5 aisles and 700 million people per plane kind of things. And I kind of believe in the Boeing model a bit more in the future. That's where I think the airline industry is likely to go more. So that's why I hold these shares. I think they'll go from strength to strength, so I'm going to keep hold of that for the future. So BP, I talked about them in more depth before. Now BP have an issue at the moment where they're a quarter down from the point at which I bought them, which was already considerably down, and it's no surprise. The demand for petrol and other types of petrol-based diesel, other products is massively down. There's huge uncertainty in the market. I am a big believer in what BP is doing versus pretty much any other petroleum company in the world. I'm a big believer in how they're focusing on electric. I'm a huge believer in their renewable stuff. And I know that some people don't believe it, and I know some people think that that's just a front. I have seen what BP are doing at their service stations. I have seen how their approach is fundamentally different to other people's. I've seen their annual reports. I'm going to keep hold of that. I don't think it can fall much further than that for the foreseeable future. Maybe it will. Maybe I'm going to be proven completely wrong and I'm going to lose my entire £85 in there. We'll see. Next I have Coca-Cola, Facebook and Microsoft in roughly equal standings. Very popular companies. Coca-Cola, a huge food company. I still believe that Facebook has even further to go than they already have. Microsoft is just dominating the personal computer space and professional computing space in terms of basic software, operating system, in terms of providing the office software that everyone uses. I don't see how that can't grow a huge amount over the coming years with the new subscription services where people are paying monthly for access to those. I don't see anything remotely close to even competing, so I am gonna stick with that for a long time. Netflix needs no introduction. I actually think even though they are now like 35-40% of the entire downstream traffic in the US, which is bonkers, it is mind-boggling, I still think they have further to go. I think the way that over the last 2 to 3 years they've begun upping their production of very high quality movies and very high quality series is only going to take them further. Anyway, next I have Nvidia, very similar to AMD in a way. They have a very different set of production technologies and things that they're focusing on. They're currently extremely good on the graphics side of things. Again, huge potential there for production. They're up a third on my portfolio. Pepsi, same story as Coke. I have Pinterest. Pinterest has been doing incredibly well. Actually, I bought it and then it collapsed. It was like way down versus where I bought them for quite a considerable period of time. But I have belief that they have something so different to what the other social networks and the other sort of online tools that allow you to collate different information from different places. The way that they offer it is so unique, and it is so popular with some segments of the population, especially on the female side. The vast majority of Pinterest users are females. I am wanting to keep hold of that. I was proven right so far. 63% up is insane at £203 in total. So I'm pretty happy with that. Qualcomm, another manufacturer of computer hardware. They produce the chips that you will have in almost all non-Apple handsets. So the Snapdragon chip or any of those types of things, I think, are made by Qualcomm. If not, tell me if I'm wrong below. I'm pretty sure that's the case. They produce a huge amount of different types of incredibly precise processors and other types of hardware like that. Slack, same story as Asana. I actually personally use Slack. I think, again, they offer something unique. They offer something that mixes a lot of stuff. Today, they went and announced some really cool thing. I haven't actually gone and looked at it, but they're now doing a sort of stories type thing with their software where you can go and upload little videos. It's really useful for people collaborating so that people can do a quick update on something. I think there's massive potential. Smile Direct Club, I actually got those shares for free. Those 2 shares came in for free, but unlike all the other ones pretty much that I got for free that I sold to go and buy some other shares that I actually wanted, I have kept hold of them because I believe in their business model. I think this is going to go from strength to strength. In the US, I actually think they are going to do insanely well over the coming years because the type of services they do are extremely popular and extremely in demand with young people. So I have a lot of faith in keeping those shares. They're already up 30%. Next, I have 2 last ones to finish off with, and that is Texas Instruments and Walt Disney. Texas Instruments is not the sort of well-known technology brand that people like AMD or Nvidia or Qualcomm are. You don't really hear about them so much, but they're the sort of the next level down guys. They're the guys who produce the chips for the guys who produce the chips, if you like. They're the guys who have the factories and the technology that the big guys will often go and utilize to go and form some part of their components. And they are so good at what they do. They've been doing it for years and years and years. I actually remember I had a Texas Instruments calculator that from the 70s or something that I got passed down from my parents when I was at school. There's an insane amount of technology history that goes with them, but they keep innovating and they keep being at the forefront of what they're doing. Again, just like with the other tech companies that I was mentioning, I'm keeping hold of that. Walt Disney, I'm actually surprised that they're up. They're 6% up. I'm surprised that they are up at all. I don't really understand how they can be up, given what's happening to Sony, given what's happening to the film industry, given that all of their theme parks have shut down, given that cinemas have all shut down. I don't really understand what's going on here, but I'm happy for them to be doing well. Obviously, they have the new subscription service, which by the sounds of it is doing extremely well. Maybe that is reflecting the share price staying really strong. I don't know. But anyway, overall, extremely happy with the first 3 months. I can't believe that I'm over 12% up on something in such a short time period. I am sure that when I next do this update, I'll probably be down from that. There is absolutely no chance that I'll end the year on plus 12%. And because this is just an insane number. If I do, I'll be ecstatic. I'll be very, very happy. We'll see how we go. I'll update you on what happens with this as it goes along. One little point, I was kind of thinking that some people probably will say, hey, what is my strategy? What is my plan with this going forward? And there's two things that I wanted to say. One, I know that the absolute maximum limit at the moment for ISA accounts is £20,000 per year in the UK. And if I was doing the sensible thing from some people's perspective, I'll go and max that. I would have, by the end of this tax year, by the time the new tax year rolls in April, I would have £20,000 invested in this account. But I am not planning to do that. And the reason I'm not planning to do that is I want to go and take any money that I have that is surplus, that is available, that I can go and use for investments, and invest it in my business instead. That's where my focus is at the moment. I have a huge amount of content that I need to produce. I have systems that need to be built. I have processes that need to be managed, and I am taking any spare money that I can afford to go and invest in things and investing in my business instead, because I believe that the returns on that investment are actually going to be greater than the returns on the investment I'm making over here. That's why I'm making that choice. If for some magical reason I can't possibly invest any more money in my business in the next few months, then maybe I'll put a bit more money into this and we'll see how we go. If I get any more free shares, they'll obviously be added to this as well if anyone goes and uses the link below to get their own free share, and they'll probably be reflected in the updates that I do coming up. The second thing that I wanted to mention is that as I go through time on this, I will adjust the distribution of my shares and how much I hold of the different companies based on just how I am feeling their product diversification is happening, how they're improving the products they already have, the moves that they're making, the announcements that they're making. So I have been doing a small amount of this. I am not the sort of day trader type guy. I actually very rarely do any trades. In fact, I think I probably on average go and buy and sell stuff, I don't know, like once a month, if you exclude the selling the shares that I get automatically in order to invest it back into the shares that I already hold. So I don't do very much of this, but over time I do adjust it. So I get more into some companies and less in others as I see the strengths developing in those and potentially some of them weakening over time. If something new happens, if something really interesting happens, or a company that I really want to have a small stake in comes on board, I will probably go and put a bit of money into them as well. I hope you found this really interesting. If you have, make sure you go and subscribe to this channel. I am going to go and release more of these videos in the future. I'll tell you exactly what I'm doing, exactly how my investments are performing. I'm probably going to talk a little bit more about some of the specific strategies and specific ways that I use to go and identify the companies that I want to invest in. A bit more useful information about that, because I feel like I didn't actually put out that much content when I started talking about investing. If you like this video, please make sure you go and smash that like button for the YouTube algorithm. It is so important. I can't stress it enough. That is what YouTube uses to try to understand if you actually enjoyed watching this video. Go and smash it. Go and hit it right now. Go and turn it blue. Thank you so much. I really appreciate it. Thank you so much for watching, and I'll see you guys later.